where gold and silver and the mining stocks take such leadership among assets in the world that you could invest in, that it takes your breath away. And yes, even the laggards of silver and the miners are going to catch up now to gold. In fact, we think silver has just now, in the last few days, on a relative performance basis, meaning a spread chart where you measure silver versus gold, has broken out in relation to gold. So not only are both metals driving north, but silver is now likely to drive north at a more rapid pace.
After months of consolidation, silver hit a much-anticipated $25.20 on November 29th, the metal's highest price since May 9th, during the thick of the regional banking crisis in the United States. Before the banking sector crisis, the last time silver went above these price levels was in April 2022, and before then, in July 2021. So this is certainly a huge deal for the white metal and silver investors everywhere. According to Michael Oliver, the founder of Momentum Structural Analysis, we are still in the very thick of a metals bull market, and both gold and silver prices are really about to take off. Oliver's firm uses his momentum-based method of technical analysis, which he began to develop in the 80s after realizing that traditional price chart analysis had too many loopholes and was often deceptive, especially for investors who depended too strongly on support and resistance levels and price chart breakouts. He has mapped out these interesting momentums for decades and provided unique technical research on stocks, commodities, debt, and foreign exchanges to banks, hedge funds, mutual funds, and other top players in the financial industry. According to Oliver, the moment we have been waiting for may finally be here. The renowned commodities analyst says gold is about to have a massive breakout to the upside, but it will be nothing compared to what's about to happen to silver in the coming months. We will now bring you clips from Oliver's recent interview with Liberty and Finance, during which he gives his outlook on silver and gold. While you watch the video, please don't forget to like this video, subscribe to the channel, and turn on post notifications for more videos on gold, silver, and other metals. Thank you, and enjoy the video.
We think that the bull market that's been underway in monetary metals, especially gold, which began in December of 2015. That was the low. Gold was $1,050, thereabouts. And it doubled over the next 8 years. If you go back and look at the history of gold bull markets, like from 1970 to 1980, when it went from 30-something to 850, and then you go from 250 in the year 2000, 2001, you went to 1920, took you, 10, 11 years. We're now 8 years old. So this is not a new bull market. There have been enough sell-offs en route to where we are now to make people think, it's not a bull market anymore. No, it wasn't. It's just a massive congestion zone that has been in place for the last 3 years. Gold keeps going up over 2,000. They sell it off, 2,000, sell it off, et cetera. The game is played over and over as if it's some kind of top. It's not. We've argued it's merely a massive congestion zone at all-time highs, meaning above 2,000, just keeps coming back. We think it's ready to launch now for a more dynamic phase of the bull market. And if you go back and look at the bull market in 1970 through 1980 and 2000 to 2011, you'll see that in the last year of the aged bull markets, and they weren't the same number of years. One was about 9 or 10. The other was 10 to 11 years. We're now 8 plus going into our 9th year. Not that it has to go 10 or 11, but we think we're entering the phase where back then, for example, in the 1979, 1 year before you hit your peak in 1980, and also between 2010 and 11, in the last year or so of that bull market, you went ballistic. In other words, it was no longer an incremental fist fight all the way up. The angle of incline had been like this. Now it's going to be more like this. And I think that's where we are on the map. And I think we're now beginning it. What we would like to see for this month's close? Well, we have some final numbers that we'd like to see triggered, but frankly, we've got enough momentum-based trigger numbers already full green light that these last numbers we consider them secondary. But if you can close silver out this month, meaning a couple days from now, and we're using December silver right now, above 25.13, that will close above the three prior peak closes of the last 2 years, which each have been either side of 25, talking monthly closes now. There have been three peak closes, not back in 2021, it was up near 30. But since then, there have been three peak closes, monthly closes, either side of $25. If you close above those three, then the price guys are going to say, oh my gosh, this is for real. They'll wake up finally. Gold. We have a number, a momentum-based number, that if you close out this month, meaning in 2 days using December gold, around 2025, right now we're 2040, expect the launch phase. Okay, and I think we're there. I think we're going to get the launch phase, meaning that what you've seen over the last 8 years of advance in gold, the layered advance with huge up moves and nasty sell-offs along the way, is over. We now go more vertical. And that's the phase that I think also other markets get impacted the other way.
During the interview, Oliver also talks about gold, which is always the leading horse in the race in every bull market. According to Oliver, gold has been gathering momentum for 8 years and is finally about to launch. The MSA founder and analyst believes this could very well be the moment we've been waiting for, the moment when more investors realize the importance of assets like gold and silver, given current economic conditions. People start buying in droves and multitudes. As Oliver and others have predicted, when that happens, it will become much more difficult to suppress and manipulate prices, and gold and silver can finally assume their real value. As evidence of the incoming launch, Oliver explains that the gold chart has topped and consolidated 3 times, and the 4th time could just be the moment when the real magic happens. Let's get back to the interview.
If you round it off to a $50 increment and keep a point and figure chart, where every $50 is an uptick or downtick, et cetera. The high in 2020 was 2050. Yeah, it got up to 2070. Okay, but 2050, top $50 tick. Then you pull back up to 2050 again. You've been up, that was in 2022, March of 2022. Then early this year, back to 2050 again, intraday on a high level. We're now back within $9, I think, of hitting 2050 for the 4th time. So if you ever go through there and print a 2100 price, then if you're a point and figure chartist and that's your belief structure, is you go through that and hit 2100, that's a quadruple top breakout. Now, it's our experience, if you go back and look at the 50-year history of gold since it was legalized, gold has never even double topped. In other words, if it ever goes back to its bull market peak, or what you thought was its bull market peak, that wasn't its peak. Every time gold is topped, it has never gone back to its high again. 1980 peak at 850, it melted. The 2011 peak was over 1900. You tried repeatedly during the year 2012 to get back up to 19. You couldn't even get back to 1800. This time around, since 2020, we've gotten up to over to 2050 3 different times. Now we're about to do it a 4th time. So even from a price chart perspective, this is different. And you can consider this zone that we've been in. When you stand back and look at it, looking back 50 years, for example, on a logarithmic chart of gold, it hardly even looks like it's had any dips. Realistically, doesn't it? It looks like a tight fist of ink. The dimensions of those 2 prior bull markets in terms of price fold gains were around 8-fold. From 10-year period, gold went up 8 times. Okay, the last bear market low was just above 1,050. You do the math. That says, hey, if you want to routinely match the dynamics of the 2 prior bull markets, you got $8,000 gold. Well, we argue that given the dynamics, the fundamental and technical dynamics that exist out there, in terms of driving forces for gold, to expect the normal might not be a good expectation. It might be something entirely more than normal this time. And if you go back and look at the ratio of the price of silver in relation to gold over the last 50 years, right now we're about 1.2, 1.3% the price of gold, okay? Ounce of silver versus an ounce of gold. Going back over the last 50 years, it's been over 6% of the price of gold, and repeated number of times, it's been up to the 2.5 to 3% of the price of gold. Well, if you have $8,000 gold and you ever go to 3% of the price of gold when gold's trading at 8,000, in other words, another routine eightfold move in gold, and silver happens to go back to a ratio, a percentage of the price of gold that has been repeated, almost normal. It's not even excessive, of 3%. Well, we're talking hundreds of dollars per ounce of silver, a couple $100. So I don't think if that's going to be achieved, it's going to be achieved over the next 5 years. I think it's something that's likely to be achieved in the next year or so, meaning the dynamic move is at hand.
Silver acts as a lagging indicator for gold, often offering more volatility compared to the more stable gold. Historically, when the spread gets above 80, silver doesn't just outperform gold. It goes on a massive explosive run for a short period of time. Some analysts have compared the leading precious metal to Bitcoin, the largest cryptocurrency by market cap, and silver to Ethereum, volatile and undervalued but offering the chance of a greater run for investors who time the market correctly. What do you think about the interview? Will we get a reversion of the gold-silver ratio to its historical levels? Please drop your comments and observations in the comments section below. Also, ensure you smash the like button, subscribe to the channel, and turn on the notifications for more videos on silver, gold, and copper. Thanks for watching.